Happy Saturday and good afternoon. This is Dr. Jeffrey Scott, and this is my weekend market update for the week ending Sunday, March 30th, 2025. For those that have been here before and haven't been back for a while, I recently changed my format. You'll see a much shorter slide presentation because my partner Praveen built a platform called Market MRI Pro that consolidates a lot of the market breadth that I spent so much time with in the presentation into a very rapid review inside a platform. You'll see a little bit of that today. I titled this Bear Flags Breakdown, How Low Do We Go? And I think if you've been watching the markets, I hope you raise cash. It's a tough market. I mean, I think we're going to go a little bit lower, maybe more than a little bit lower, but we still are getting to a point you'd expect a pop higher and a retracement. So going long here is hard for me to do, except for maybe contra ETFs. And going short, I think, is the right thing to do, but you got to be nimble and careful. And with my lifestyle of having a large company and being on the road 3-4 days a week, nimble is not my name. My email addresses, however, are marketmripro.com and htsidoc@gmail.com. If you like these videos, please hit the up thumb. That way, maybe YouTube will actually put it in front of 5 people, more than 5 people. If you're new to this, hit the subscribe button, hit the alarm, you'll be notified, and I'll talk about a better way of finding out in a few minutes. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy long or short or sell any stock mentioned in the report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And as I will mention in a few minutes, you will see that I have tools in multiple platforms. If you're looking for the wealth charts video, and that's one of the changes, I'm going to spend most of my time in Market MRI Pro, but I still use wealth charts. I still like wealth charts a lot, but I'll do those videos exclusively in the stocksanddocs.com website, where it's placed when I do them, which is as often as I can with my schedule. It's placed around 8:30 in the morning on the day of trading. Stocksanddocs.com. Fill this out on the bottom. They don't send me that information, so I can't really ping you or hassle you, but it will allow them to send you an update every time I post something, so you don't have to be going every day and wondering, did he or didn't he? If you like what I do, if you want to give back to the community, come to the live meeting. How is that giving back? Well, it supports us continuing the live meeting at $300 a person. It's really not about making money. It's about not losing money. And I can't even fully compensate myself or the speakers for their travel, but we do it because we like to teach. And, we make this no frills. There's no coffee. And it's at actually it's going to be at the Residence Inn, which is next door to the Fairfield Inn and Suites in Tustin, Tustin County, California. I used to practice in Georgia. I don't know why I said that. For more information, call Greg Mills at GAM72054@AOL.com. I'll announce by the end or by tax day who the speakers will be. Typically, Chris White will call, the proprietor of EdgeRater, will call in from England. Dev is usually there live. A little bit more quicker trader than I am. It's nice to have contrasting styles. And then I've got a couple of ideas of people I'm trying to get them to commit. So hope to see you and come be part of our community. Speaking of community, I used to have a small mailing list for friends and family. And when your family's emails are bouncing back as spam, it tells you that emailing is not the way to contact people. So I started a top-down trader Google group. You sign into Google Groups, and it will give you options of what to join. You type in top-down trader, excuse me, how you want to be notified. I'll let you in within 24 hours. Then every time I post something anywhere, you will get a notification. I do at least 1 or 2 a week that I do exclusively for top-down traders, so I don't post on YouTube. And I'll talk about multiple platforms there. And every once in a while, I get excited because dialogue starts among the members, and that's really what I like to see. I've been asked why not do a Discord group, and the reason's simple. I did a Discord group. It still sits out there in Discord called High Growth Stock Doc. And the problem is it really needs active intervention. And I just don't have the flexibility during working hours. This is more passive, and that's why I'm using it. Speaking of platforms, no, I do not have stuff in HGSI. Actually, I do. I should take that back. Because if you have HGSI, for example, and you were to go into the warehouse view, and you're going to see I have some of my favorite scans are in there. Now, this is probably stuff I added to. Some are in there. So I do have both charts and scanners there. But I learned much of what I do from some smart people. Ian Woodward, who I think I would call him a pupil of O'Neill, really is responsible for much of the stuff I do. John Person, Hoffman, others are David Elliott, Bigelow. There's a long list of people who influenced my style of trading. But HGSI was really the platform that tried to get everything in Ian's brain into technology. It's still a great platform. I still use it. Case in fact, I pulled it up and I didn't start it. It was already started. Wealth Charts, Rob Hoffman's platform. It's probably, of all the things here, it's probably the most full-featured or as full-featured as any of them, with great scanners built in, charting platforms, and data which includes very low-cost real-time futures. TradeStation, trading platform. I've got a unique app that's neither a radar screen or a scanner, but thinks it's both. And indicators, TradingView, I've got some indicators. Metastock, hopefully Jeff Gibby from Metastock and I can finalize what's in it and go over some of the things that he built for me, and that'll get launched soon. And I'll even get exposed to a large audience because I'll be able to speak at their traders platforms, I hope. And then Market MRI Pro, which is now on the market. If you have questions about it, just go ahead and contact me through either of my emails or the Top Down Trader group. Is there a recession in our future? I think so. Is it tomorrow or right around the corner? No. Why do I think so? Because if you look at the yield curve, this is zero. When it goes below zero, it's inverted. Gray bars equal recession. If I look at the fast 10-3 month, every time it goes, there's a period of delay, and sometimes it double dips, and then we get that recession. Double dip, double dip, double dip, and we double dipped here. We don't have the recession yet, but it happens every time. Going back to 1980, why would we expect it to be any different? I put the 3-month in twice. I tried hard not to make that mistake again. I got a 10-2 month, which the only difference between that and the 3-month is 10-2 year rather, and the only difference is it hasn't double dipped, but you got the same gray bars. So I think a recession is guaranteed. How am I going to know when it comes? Well, you can see credit get tight at the time of recessions. You notice that this line spikes. It spikes in times of tough markets. With or without a recession, it has not spiked here. And then the diffusion index, which is a Philadelphia Fed indicator of economic activity. Typically, a recession falls after we get to -20. And we got to -20 and bounced, but we are positive now. So I don't think we have one near future. Do I think we're in stagflation? I don't know, but that's what the market thinks, so it doesn't matter if I agree or not. We still have decent growth, and we got inflation. It's a tough model for the Fed to manage because they can't really cut rates with the inflation to stimulate. The tariffs probably make it worse. I used to look at or put this in my presentation, always looking at the expected moves in the market. And, you know, the theme here, and it's not, I'm not going to go deep into this, But we're going to talk about where our targets are and how long it's going to take to get there. And I'll point out that this past week, we exceeded the expected move to the downside. The prior week, which was a very narrow expected move, we gapped through it and stayed above it. The week before that, we exceeded it to the downside. The week before that, we exceeded it to the downside. The week before that, we exceeded it to the downside. The week before that, we exceeded it to the downside. What happens if we exceed it to the downside? We pretty much get to a lot of the targets that I'm going to talk about. So we could be getting close to a bottom. Obviously, this coming week with lots of employment data and more importantly, Trump tariffs, April 2nd, reciprocal tariffs will be an event. If Trump pulls back and softens blows, market rallies. If Trump puts them in place, market might rally. And so that's why I'm a little bit careful to be on the short side. And why might the market rally even if the tariffs are in place? The market will rally because they'll be able to price it in. It'll take out some of the confusion and uncertainty. And then what happens if they're worse than expected or wishy-washy on or off again? I think we go lower still. So odds are we're going lower, but do we have a relief rally coming? We will see. Know your news and earnings, as I said, heavy on you got ADP employment, jobless claims, and monthly employment report. You got lots of Fed speakers, including Powell at 11:25 Eastern on Friday, April 4th. And you got factory orders, ISM, and spending, job openings. So there's a whole lot that's going to come in. And what happened on Friday is the worst possible, which was the tariff talk from Trump and concern about April 2nd. The PCE came in a little stronger than expected, and the consumer sentiment was weaker than expected. Stagflation type of a picture. We still have earnings left this week, but as you can see, this cycle of earnings is starting to slow down. Restoration hardware might be interesting. And I don't know, I'm not saying which direction, but this thing's been beaten up, and it's just a name people like. And I wonder if the market rallies, if their earnings are okay, is that something that might be interesting? But I'm being hypothetical. It probably is going to go down like everything else will go down if the market's not happy. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Now, I spoke a lot today, but I really cut down in half the PowerPoint here. Top-down trader group, I already mentioned it. Love to see you there. And let's go on to the charts. And I am thinking about a meeting down here in Florida, maybe something I'll be able to do with my buddy John Person, who's also down here. We've also talked about doing something in a different location. But more on that will follow eventually. All right, let us now go into Market MRI Pro. So this is where you basically will come into it, but I want to start with, let's look at the markets. The daily brief, when it populates, will give me 1 and 5 day performance of the market ETFs. It'll give me ETF performance. I have themes. We'll look at 3 different indices and some of their breadth, and we'll look at highs and lows. Okay, here is the daily brief. I actually had to stop it for a phone call. Up here in the upper left I just put a couple of the ETFs that I like to follow. I'm going to add a couple more. There's certainly space to add more. I look at them for 1 day change, open, high, low, percent from open, 5 day change, the range of the current day, and where it closed in the closing range. So if I just click on the 1 day close, it tells me that the leading ETF, which you never want to see, is volatility, the VXX. And when I see that it closed at the high of its closing range of the day, that's not a good sign. When you look at the major ETFs, they range from minus 1.73% down on the diamonds to 2.63 on the Qs. That's awful. And not only is it awful, the Russell, which is at 21st 1% of their daily range was the best. The others are almost at the low of the day. So you got volatility at the high of the day. You've got the market ETFs trading at the low of the day, the ingredients of a very bad day in the market. Now, not only was it a bad day, despite a tease with a strong open and a strong day on Monday, you could see on the week, VIX was up 6.9, and all these major ETFs were to the downside, led by QQQ, and the MAG stocks really took that down. What else can I show you? Up here are the new high, new lows in the NYSE at 4 time frames, the NASDAQ at 4 time frames, and then the combination new high, new low, so new highs minus new lows. One thing I always like to say is bull markets are not built on new lows, and we have more new lows than new highs. This side, the big group here, I look at the S&P sectors. Let me just take away that distraction. And I could look at on Friday, what was the lead in the S&P sectors? Well, the only thing up was utilities. Next was real estate, healthcare, and energy and staples. Everything else was down more than 1%. The only thing up was utilities. What are this group? Well, you take energy out because it's got its own drivers. The rest of them are the more defensive stocks. So clearly on Friday, the defensive plays were in favor. Down here are themes, okay? And I have 40 or so different themes. What themes were at the top? Well, no themes were positive on Friday. Doesn't look like that ranked the right way. So that's from the open. So the only theme that was positive on Friday, let me say that again, was Global X Renewable Energy and MLPs. Every other theme, including gold and silver, were negative. And if you go down to the bottom, you can really see what the big negative was. Don't do that to me. And we look at the one-day change. Blockchain was down 5%. Clean tech was down 3.81. I could also look at 20-day change and 50-day change. And if you look at these ETFs, except for the MLPs, and then over here is cannabis, they all finished at the bottom of their closing range. Bearish. If we look over here, I've got 3 indices. This is working real time on your desktop. Now, I decided not to stream it because why bother using up the data cost and the bandwidth when you're not going to be sitting in this the whole day, and if you hit refresh, it takes about 3 seconds, or the time I just said that, to update. But up here, I got something that's really cool. Take the S&P 1500, the NASDAQ composite, the NYSE composite. The gray bar is the day before in the market. The blue bar is today. You could see on Friday, only 1 out of 11 sectors were positive, or 9%. Only 11% of industry groups were up, and 14% of stocks advanced. Not only were the indices bad, but the breadth across the market was horrible. On the NASDAQ, no sectors were up, 10% of the industries were up, and only 16% of the stocks. And on the NYSE, one sector, 11% of the industry groups, and 16% of the stocks. There's no world that I live in where that is not an extremely bearish picture. I like then probably jump to the market breadth tool, and the market breadth tool will reproduce a lot of the things that Ian created and others have done that look at breadth in the market. This is daily charts. On the left is the NYSE, on the right is the NASDAQ, and you can just see the big long red candles, and where we were back up here on the left, we were saying how the NYSE had held up well while the NASDAQ broke down. The NYSE is rapidly trying to catch up to the NASDAQ. And so big down day in the market on Friday on both of them. The NASDAQ broke out of their wedge, bad sign. And the NYSE is at an opportune bounce place, sitting on the 200, but I'm not so sure. Down here is regular volume. Looking at spikes are interesting. Here in green is the 20-day, red the 50 is 200, white the 50, and it represents the stocks above the moving averages. When do we reverse? We reverse when we get below this dashed line, and it can always get worse, so we're nowhere close. We're getting a little close on the NASDAQ, and no surprise, the NASDAQ is much weaker here than the NYSE, although if you look at the pattern, big leg down, retracement and failure, big leg down, retracement and failure, they really are not that much different shaped. Then we have new high, new lows, advanced decliner, and up down volume. And what you can see is new high, new lows were negative on both. Advanced decliners were negative, and the new high over um, up down volume versus lower volume. Sorry if I said highs again. That's on the top, but the up down volume is decidedly down volume. So very weak day in the market. Question is it weak enough? Well, let's go look at some of the charts. So let's look at the timing charts and see if there's been a change in our timing model. And compared to last weekend, there is a change. Now going into last weekend, I was thinking the market was likely to bounce. And it sort of did at the beginning. If you look at all these weekly candles, the top of that red candle is where we opened. On Monday, it traded higher, and then it traded down the rest of the week, closing at or near the lows. You also have bearish engulfing patterns on the Spider Weekly, the Q Weekly, the Russell Weekly. Bad looking charts. And if you want to make it worse, if you're a fan of John Person like I am, you got low close dojis on the indices. This market is sick. If you look here at the buy sell line, you could see it's red on each four of these. So from a weekly perspective, and obviously from anybody that's in the market, we are in a downtrend. Now, where's the change? Well, over during the week, I was talking about how we switched to an uptrend on the daily, and that was the retracement that we saw here. But boy, did that not last long, and the market has collapsed. So market is not healthy right now. We are in a downtrend on the weekly, a downtrend on a daily. And the only thing that is interesting, if you want to think bullish, is we've only flipped on the monthly on the Russell. So long term, we're still going higher if you look at monthly charts, except for the Russell, which has been chopping for a while. Weekly down, daily down. I find it tough to want to be long a market with those characteristics. If we look at the U.S. indices, and we'll pop them out one at a time and talk about them, maybe mark them up a little bit. So we're going to start with the spider. I guess I have to highlight it first. So the spider, I put this here at what I thought was going to be a double top, false breakout, breakdown, rally into the 100, 200 breakdown. And then I have to ask myself, where are we going? Horrible day on Friday, down over 2%. So if I back up a little bit, where do I think we're going? Gosh. Is this where my target should be, around 539? I don't know. I mean, I think that this is an obvious place to look at for a bounce. If that fails, I mean, are we coming all the way down here? I think this is a market that is risky here, and so I am purposefully being careful. If I look at the weekly on the S&P, on the weekly, where do I think it's going to? About the same in that 539 area. So I think this market has more downside ahead of it. The question is, does it rally on news on Tuesday and try and retrace? And what was I saying last week? I was saying that it might retrace to the 200 and fail. It might retrace to the 50 and fail, but I was betting it would fail. I still feel the same way. If I look at the NASDAQ or we look at the Qs as the case may be, similar story, failed at the 200, breaking down, bear flag, breakdown, just like we saw in the spiders. If I look at the Dow, flag, reversal candle, and a breakdown. Um, Breaking down out of a bear flag. If I look at the Russell, this one's been the toughest one and down the most. And you could see how broke below the 50, traded down to the 200, ran back into the 50 and failed, traded down to the 200 and failed, and now can't even get to the 200. And you've got a death cross that occurred here with the 50 below the 200. Excuse me, like the other, at least on the daily, a breakout of a bear flag. Looking at volatility, you could see a super strong day on the VIX on Friday, up 15, 16%, and the dollar kind of languishing after selling off. Now let's just look at all these in weekly and see if there's a pattern here. I mean, the pattern is I've got a lot of bearish engulfing patterns at resistance, and that cannot be good. Cannot be good. If I look at commodities, commodities, unlike the stock markets, have been extremely strong. Now, we had a little bit of a divergence here between gold and silver. Gold was up again on Friday, all-time highs, where silver actually traded higher and then reversed. Oil is stuck here between the 50 and 200. I think there's concern tariffs are going to slow the economy. The economy drives the use of oil, and therefore oil is languishing. Natural gas, which, I mean, I just love when things behave the way they're supposed to according to the technical analysis gods. So here was a stock, or ETF UNG, which was respecting the 200 on every attempted rally. And then we got here back in December, we broke above, we retested, which you love to see, and a big run. We just had another retest. I think this UNG looks interesting here. Now, when I say something is interesting, it doesn't mean I put in a buy at market order. From my perspective, I wouldn't be interested in this unless it goes above the current price. It hasn't really respected the 17-day in the past, but I certainly would not buy this unless it actually started going higher. And right now, I'm not sure I'm buying anything to the long side because of Tuesday. 10-year down on Friday, as was the 30. If we look at the buckets, which is another way of looking at markets, and you look for excessive optimism or pessimism, we know from sentiment we have excessive optimism. On the buckets, we're not excessive yet. You have 12% of the stocks in the NYSE below their bands, 12% in the S&P 1500. Those were big moves from the prior day of 4 and 3. We got 16% of the stocks in the NASDAQ are below and 16% in the Russell. So that was a big change for one day, but we certainly could feel some pressure from that in a mean reversion, but we're not oversold enough for us to say we're going to bounce because we're oversold. The guppy charts are charts that I like to look at just to give me a sense of where we are compared to prior breakdowns. Now, I usually look at them on the weekly charts. Let's give ourselves 300 periods. And you can see on the weekly charts, except for the Russell, where the moving averages have started crossing over. And the things that we're seeing in here is the recovery related to this. They haven't started rolling over from this move yet. Except for the Russell, the spider, the Qs, the diamonds, and even the equal weight QQQEs and RSPs have not really broken down yet. That might be one of the bullish cases to say maybe it's not as bad as it feels. And then lastly, the ratio charts. Ignore this one, it's a Bitcoin versus the spider. But we created ratio charts of individual S&P sectors versus the S&P 500. We look at them on an hourly time frame, and what we're looking for is what's pointing up to the upper right-hand corner and who's got the white bars. Well, we know on Friday, defense. So towards the upper right, long white bar. Staples, utilities, real estate, and healthcare. What's not behaving well? Discretionary, although surprisingly was not the worst performer. And technology, that's not a surprise. Industrials held up okay, come down some. Financials look pretty good here, interestingly, as does energy, and materials are holding up okay. So it's really that technology and discretionary sectors that have led the market down. Now we go back to the first page, which is layout. Now, for those that own my package, I just got the next beta to play with today, and we've been promising you that right now this is heavily towards how I trade, and that we'd be launching the ability to make your own layouts combining my stuff or just traditional indicators, the MACD, stochastics, and things like that. So we have the ability to add multiple windows here, and that version, hopefully, I'll try and break it over the next week, and if everything is good, then we'll get it out to you. So I'm excited. We've got a few more things up our sleeves before, well, we're not even, I don't want to say, because I don't want to steal what Rob says. He says they're just getting started. I kind of think the same way, because since you've got an integrated trader and trader developer, all we have to do is have a conversation at night one day, and if we really like something, the next day he starts building it. So that's why I'm so happy with what we're doing. All right, so I'm going to look at the market first from a top-down perspective. I'm using my large data set, which is a JAS, which includes all the stocks in the S&P, well, the NASDAQ, the NYSE, and the Amex. S&Ps are in there, filtered for $1 and 100,000 shares. And if I looked at that, that is 3461, down a little bit after a weak week. Now, the top down, each of those stocks comes to me from our data provider, and it basically suggests what their sector and industry group is. Not everything has it. You have ETFs and funds, but we're able then to characterize every stock in our data set and what sector is it in and what industry group. Since we're looking at sectors based upon a list that might not be the same as S&P 500 or 1500, you might see variability. This is a exhaustive list. When I look at what was up, it was utilities. It was the only thing that was up on that list. Now, I could click on utilities, and then all of a sudden all I see are the industry groups that are utilities. I could look at performance on Friday, for example, and say, all right, let's look at water, gas, and electric are the top three. And that'll bring up 57. Now I could look at them by performance. I like to look at 2-day momentum to sort of eliminate one-day moves. And I could go down. The first one is actually on my list that I was going to talk about today, which is AWK. Give it a second to load. Okay, so why did it make my list? Well, you had a big pullback, a reversal candle here. You've had 3 big moves up. It's just one that has good short-term momentum, which is what I've ranked them by. Had a good move on Friday. It's not extended. The relative strength has broken above its moving average, and the OBV, I think, turned positive as well. It's not a great-looking chart, but you know, wait to see the rest of the market. I don't know what OGS is. One gas. So when I see something like this, I just can't help myself. I want to touch the high. I want to go through the last high. And we're right up against a trend line. So kind of looks like a cup and a handle and trying to be a breakout. That might be one I would put on my list. So all I got to do is right click on the and go add to hot list. All right, the next one is NCG. Not yet. AEP. Again, the same basic story. Now, am I going to be that excited to fill my portfolio up with utility stocks? No. But if that's what's working, that's what's working. And these pay dividends, usually 2 to 4%. That's AEP. CWT? No. I don't like buying below 200 if I can avoid it. SJW? South Jersey, I think, although I'm not sure. What are some of the ones that I liked? Southern and PPL. CMS, and AEP. So let's look at Southern. Again, the same basic pattern. So you've got a story here. One, they're not exactly the world's most exciting stocks. They're utilities. But you have a number of stocks that have big run-ups, pull back to support, and are breaking out. Let's look at PPL. This one's even more interesting. If I put my horizontal bar on the closing high here, you can see we broke out to new highs. NWN, Northwest, again, another one, same basic story. I go to the next highest. We're breaking out of a trend. So, am I a big fan of utilities? No. Am I going to buy any of these? I can tell you I put PPL, AEP, CMS on my list of stocks that I'm going to look at as the market plays out this week. Here's CMS. And again, if you look at closing high, not intraday reversal highs, you are right at a prior closing high. Now, why did I not do? So another one that I might look at. All right, so you saw what I did is I highlighted my choice of sectors, narrowed down the industry groups, and it gave me a list of stocks. I could rank industries by percent performance. And just let's look at the top 10. 2, 3, 4, 5, 6. The blank one is because they're unclassified things. So there might be IPOs. And so here's the top 10 groups, 162 stocks. And let's see what we got. ONC, Beijing, soon to be B of 1. And you're probably going to see a theme of what kind of breakouts I like. I like breakouts from a flag. And Beijing, soon to be B1, looks good. Now, it's an expensive stock. Look what happened here on Thursday. You had momentum, volume, and a gap. You had the breakout signal, breakout of relative strength in OBV. That one looks really good. Here's your AWK, one of the water ones. Not my favorite one, but it's kind of very similar to that PRMB. Let's see. Let's just look at that one. PRMB, Primo Brands. What a beautiful chart. Where's the bear market? Big pullback here. Didn't even get to the 200 and breaking out over prior highs. All right. OGS we looked at. NGG, National Grid I wasn't as impressed. AEP I liked. Now looking at some of these healthcare REITs, Welltower. These are things that pay dividends, and a lot of docs like and I'm no longer practice, sold our practices to REITs. Not our practices, but our real estate, because they gave us a decent amount of money. I like their stocks because they're relatively stable. They pay a dividend. The case of this guy here, you can see it pays a 2.03% dividend, not giant, but Welltower. AbbVie is I like to call it's a drug stock that thinks like a biotech. By that I mean it pays a dividend, 3.51%, and has a lot of growth. You could see they've had some slowing earnings and mixed revenue, and they had a drug called Humira that went generic, or biosimilar I should say it, and that has hurt them over time. But the neat thing is their earnings and their revenue are going back up, and they weathered a pretty bad storm on a major blockbuster drug. So as part of a top-down approach, I can start looking. Here's ATO, Atmos Energy, another one that I like a lot. And again, I personally like to go and connect the most recent high and that high up here and draw those lines, and another one breaking out. So two different ways to do top down. Now I'm not going to show you hundreds of stocks to buy, and let's think about what I've shown you thus far. I've shown you REITs, boring, but probably do better in a bad market. Utilities might do better because of a bad market. Drug stocks, typically more resistant to bear markets. Other way is bottoms up. Here I go into the impulse side, and in the impulse side, I rank all the stocks. Here they're alphabetical. I could rank them by the number of bullish signals. Here's DBVT. Don't know this at all. It's a cheap stock. It's a healthcare stock. I don't know the story. It's kind of cheap. Here's another cheap healthcare stock. These had big moves. You got to know the company. This one is a little bit interesting. Let's see if we got any news on it here. New data for selective adenosine European lung cancer. Okay, so that's interesting. Here's a story stock that popped on new data. Well, I'll show you another story stock. This one I was lucky enough to know about from prior releases before its big data move, and that's SMMT. And what did it do? This was the original move when I paid attention to. This was the move on the next release of data, and then they always come back and they go sideways waiting to see what happens next. And I also knew who the CEO was in his history. That's why I bought it on this news piece. So if I go back to that PRTG, my guess is it's probably not going to just keep running. It'll probably run up and then pull back and go sideways, but that would be interesting to look at. Airgas was another one that I liked, or Argan, AGX. This one, steep pullback to the 200. I wonder if this was an earnings. Earnings were the 27th, so it was an earnings on Thursday. Look at this, up 149% on earnings, 41% growth on revenue, 93% surprise on earnings, 17% surprise on revenue, less than 1% dividend. Boy, that might be one to take a look at with that type of a move there. So I can rank them by the number of buckets, or excuse me, number of impulse indicators. I could rank them by 2-day momentum. Again, that's typically my favorite way. There's Airgas comes to the top. There's that DBVT, which I don't know anything about. CAR, Avis Budget. Maybe something's happening here. Got a lot of blue dots. Relative strength and OBV look great, but it's so far below the 200. You have to expect it fails at the 50 or the 200. Casey's General Store, another one that made it on my list. And this one looks totally different. This is one in a nice uptrend, big pullback, and starting a big move, and the earnings came out the 11th, so you're safe on earnings. MLGO, this is one that had a big move, but again, I never really know what to do with this pattern. Typically, I know what I do. I look at the next stock. So Z-Lab is another one I like, and this is a Chinese, it's more of a biotech incubator, and that in this country, I don't know in this country if they market anything, but what happens, also up because of cancer drug news, Beijing, that B of one company that I mentioned earlier, is bringing a lot of their drugs to market, which suggests that in the U.S. they probably don't have a commercial organization. Nice looking chart. And fundamentals probably don't matter. It's a story stock. It doesn't make money. It has some revenue that's growing quarter over quarter. Now, another thing that I like to do, and I wanted to make this shorter, I apologize that it's not, is I like to do some scans. So let's scan for above the 200, volume greater than 500, price greater than 5, and see if any 2-day momentum ups. I don't expect to see any, and I don't see any. That's my most bullish scan, and this isn't a bullish market. If I take out the requirement to be at the 200, I get INVA, another healthcare stock. This one looks interesting to me, which is why I just took off the 200. If this was flipped, and this was the 200 here, and this was a breakout above it, with the blue dots coming in, the EMS signal going from red to green, strong relative strength in OBV, I might be interested in this. I always would check up here, make sure the earnings are out, and the earnings were out. They actually have earnings now, and they have revenue, so it might be something to take a look at. but I'd like to see it, I might put a buy stop above that 200 a little bit because I don't want this to just get above and fail. How about taking the same test and let's look at any breakdowns. Look at 2-day Momo to the downside. And we have a lot of them. DAN Incorporated. This is the kind of thing I like to short. Why? Because you broke the 50, traded up to 50 and failed. Now, I probably would have shorted it about here, and now it's already moved a little bit against me. You also have a breakdown of a bear flag. ALGM, Allegro Microsystems. Yep, it's signaling because of these two red dots next to each other there, which are the momentum dots. It's come down quite a bit. It's sitting on support. Maxilinear, you know, this was a time to short it up here. There's your flag and a breakdown. Too cheap right now. ST, Sensata, again, probably had opportunities. And just like I look at these trend line breaks to the long side, probably could argue that there was a trend line there on a flag, bear flag, and I missed my opportunity. So this is picking up stocks that, and these are all pretty cheap. Let's look at this one, Triple M. So how would I handle Triple M? What I expect to see is it to do this, is it to get back above that 50. However, it might fail at the 50 and then I want to break it when it gets beyond the lows. It may decide it's going down and I'm going to retest and I might want to buy it if it moves sharply or moves below its lows. My expectation is that it's going to trade back above the 50 and be out of my interest. But if it doesn't, especially if it fails there, that's the kind of stock I like to short. And then ITT ran up to 200 and failed. And again, probably the time to do it was it broke the 17. It's already run some. And why does that matter? I told you that I think the market is going to get some big news on Tuesday and that there's a chance that whether it's the uncertainty coming out or it's not as bad as it was expected, the market's going to rally. So I'm careful on the short side right now. And then LNW, Lamb Weston, or Light and Wonder rather, massive breakdown. But again, you could see it started coming up at the close. So I'm not sure I want to short something that far away of that moving average. Now, lastly, I just want to look at the FANG stocks. I think they're under my hot list. Oh, I got to remember, I have to turn off my filters. Sometimes I forget that, and that's important because if you don't turn off your filters, you're not going to get many stocks. There you go. So let's find my FANGs plus a few others. Amazon, and these look a lot like the indices. Failure of you had a bear flag and a breakdown. APP, this was a failure at the 50 and a breakdown. And I think one of the short sellers came out on this bar and they defended it over here. Google, no. Bear flag and a breakdown. Meta, interesting. Why? Because just like natural gas bounced off the 200 a lot of stocks will pull into the 200 and reverse. So I look at the relative strength versus spider turning down, the OBV turning down. I don't want to go right out and buy it, but I might put it on a list to see what it does. If the markets rally and this starts moving off the 200, that might be a cheap place to enter. Microsoft. I mean, this is like the quintessential bear flag. Big sell-off. Let me go back up here and grab my trend line again. I mean, this was an entry on that breakdown. At some point, Microsoft is going to rally. If the market rallies, Microsoft rallies. I'd much rather be shorting it here on this bear flag. Netflix, getting all those upgrades to 1030 was the kiss of death. A breakdown below the 50. Fundamentally, it's a great stock. Everybody loves it. They're winning all the awards. They would be winning the award for the survivor if there was a survivor for online streaming. You could see incredible earnings growth, revenue growth that's very steady. Um, does not pay a dividend. That would be nice if they started paying a dividend. And it's probably just being suckered down by the market, but I would need it to start turning around. Nvidia, there was a high-profile IPO on Friday, and one of the things that the company does, it sounds like they get credit from Nvidia, they buy Nvidia chips, and then companies pay them to get to use those chips. They don't have to buy the chips. They can use them for what they're doing and be done with it. Well, they had all these high prices for the IPO. It came out at $40, which was at least $5 below the bottom of the range, and it didn't move up. What does that say about NVIDIA and the AI trade? Um, Same story. Bear flag, breakdown. Look, will it go higher someday? I hope so. But right now, that's why God gave us puts, because it's my biggest position, and I should have sold it. But what I did is I bought at the money puts and sold some calls to protect myself. Um, but I paid some premium for that. But I pay for insurance, so my wife gets money when I die and doesn't have to worry about liquidating stocks. And I buy puts, so I'm still alive even if my stock dies. And then Tesla. Now again, death cross here, nothing pretty here. At some point, it will reverse with the market, but it looks like it will not be leading the market. And then lastly, Tesla pull back into the 200 in a breakdown. I'm not a Teslonian, although I love EVs. I actually have two and a half, two EVs and one hybrid, and I love them. And I've had a Tesla. I don't have one anymore, but I don't like this pattern, a reversal at the 200. Suggests to me it might want to come back and retest. So let's end this by going back to the U.S. indexes. And let's look at them. Let's pull back up on the weeklies. And where do I think we're going? I think this line here, which is about 540, looks like a natural place to pull back. A couple bars here and a bar here. If I look at the Qs, is it here? Not all the windows are activated to put in stuff, and I don't know if we activated these. No, we didn't. So I'd have to go back and put them in on a different platform, although I thought they were. Well, unless I'm doing something wrong, maybe I have to have it maximized. Let's just try that. So this will probably be my first line in the sand now. So I can look at these and kind of tell you where my targets are, and I'll activate it, but I'm not going to activate it while I'm doing a webinar. I mean, why doesn't it come down to the 450 range, 4% more? You look at the diamonds, probably about the 400 range. The Russell, gosh, they're already at kind of where I thought the low would be. So as I said, how low do these go? So let me just summarize my thoughts. First of all, thank you so much for being here. And if you're still here on an hour-long video after I said it was going to be short, God bless you. Second thing is, if you like this, hit the thumbs up. Third thing, join my top-down trader or subscribe on YouTube. And come see us in Orange County. $300 for 3 days of live market trading. You can buy your own coffee. That's why it's only $300. Have a great rest of the weekend, and thank you for listening to me.